Welcome back, traders. I'm Kenya with BK Trading Academy. We help new and struggling traders learn how to trade with structure and guidance so that you guys start the right way, you have a breakthrough, and trade confidently. And in today's training, I'm going to be going over USDJPY, showing you how to trade this pair right now, what to look forward to going into the new week. And yeah, it's NFP Friday, guys. We're going to break down the data, show you what happened, and give you some good tips. Got my power partner behind me, and we are making it happen. Do me a favor and smash that like button. Turn on notification bell so that you don't miss the next upload, and let's get right into it. Today is NFP Friday, which is non-farm payroll. The forecast was 200K, and the actual result was that the US added 223,000 jobs. Good number, okay, but it wasn't enough to really make the market aggressive. We did see unemployment edge down a bit, so we had some conflicting data that really confused a lot of us. We were like, really, what is going on? I don't see the market reacting how we typically do. And honestly, trading NFP for over the past couple of months and backtesting even more than a year, I've never seen the market move like this before. So this was the first 5 minutes of this market open when NFP was released. And because the forecast came in higher than expected, we expected a bullish reaction. However, that didn't happen. And after exploring the data much more, we were able to understand exactly why there is sort of a mixed reaction. What we are seeing is that a US economy that is moderating, and it is still vibrant, guys. If we're still adding jobs, unemployment, even if it's edging down just a little bit, that's positive for the economy. So just a mixed reaction. It is the beginning of the year and things are just kind of, slowly going along. Also, Fed Chair Powell has said that he's going to ease his interest rate increases if his plan is working, and we do see that it is working because inflation is coming down. So let's look at the technicals and let's just kind of see where we're headed now. So if we look at the weekly, we'll see that overall, we have been in a growth phase. We were in a growth phase on USD. So we had a strong US dollar that was recovering from the pandemic. And then we started making some bearish moves, especially once we started to see the BOJ, the Bank of Japan, started to make some changes in their policy making. So on the weekly, we have a very important key structure here right at this price level. So let's just kind of identify that. That's at the 130 zone. So I'm going to bring that just down a little bit. So we are still in an uptrend on the weekly. If we kind of look at the structure, I'm not going to start, I'll just start here. So here's a low, here's a high, here's our higher low, and we can just kind of follow the market structure. Okay. So this is our previous swing low, and notice that this is an area where the market came to, formed a key level of support, rejected to the upside. Previously in the same area, it was resistance, rejected to the downside, and look at the return recently to the same area, formed support, rejected back up to the upside. So we are still in an uptrend on the weekly. And honestly, I do think there is a possibility that we will continue to see a dollar that will keep growing, but we might kind of see some things move slowly as the BOJ, Bank of Japan, also continues to make those slight changes in their policy making. So we really just have to follow the fundamentals. But technically, this is what we're up against right now. Because of this, we want to keep our eye on the level. So we know that this is our weekly structure right now. So this is where we want to keep our eye on, okay? But on the daily, so if you were a swing trader, for example, you would have been looking at this level, swing or position trader, you would have been looking at this level, comparing it with fundamentals for a potential buy off of this zone. Okay, so buy off of this zone. So far, you would have made from this zone, if you took that buy, you would have made about 486 pips just within the week. So that's pretty good, especially for a swing trader, position trader who believes that price will continue to grow. Now, since we are forming resistance at our previous key level, so let's go ahead and mark that zone. So now this is where we are forming resistance. Okay. And it was also previous support, and it was also a cluster of support and resistance. So if I move down to the daily, now these are going to be the zones that we want to watch for next week, right? So here's our daily structure. Here's our daily structure. We have a downtrend on the daily. So here is our downtrend on the daily. And one of the things that you'll notice is technically we have an uptrend on the weekly. We have a downtrend on the daily. We also have an overextended W formation pattern. So what could happen is that if we do break the neckline of this pattern, we could see a market that will come up, form resistance at our previous resistance at 13780. provide some type of retest and continued growth to the upside. That's one possibility. So next week, we want to be looking for any retest at the 134.60 zone, or I'd say right below that 134 like 45. You could be considering any type of shorts, especially short term, from this zone. Now, this is ahead of news. We do have CPI next week. So before CPI, definitely close your positions or make sure you have a stop loss on your positions that you're comfortable with, because I do expect, hopefully, for us to see some reaction, not like today, but hopefully we'll see much more movement next week. All right, but this is the resistance you want to keep your eye on, since we are still bearish on the daily. Now, until this level is broken here at 134.40, we want to continue shorting. Okay, so since we're going to continue shorting, now let's talk about where should we take profit. So if you get a retest at this zone 134.60 area, and let's say you consider a short. So if you were to short, if you are a short-term trader like a scalper, for example, you're not looking to earn 80 pips. You're not looking to get 60 pips, okay? You're looking to take a short off of the key level that you're waiting for price to come to, and you're probably going to maybe go for about maybe 10 pips on each position. Okay, just depends on your execution strategy. Everybody's different in how they do it. I'm just giving you the levels to watch. When you are considering your take profit, we can move down a little bit. And what I like to do is trade zone to zone, from one reversal zone to another. So if I am scalping, for example, this is going to be my level. So look here, you see this, we have a bearish engulfing here on the 1 hour. This bearish candle is completely engulfing this previous bullish candle. And so what we could see is a move back up to give us a double top here on the 1 hour. And if we get a retest at this area and you get rejection, you could consider a short here for a move down. Where would you take profit? Well, let's just measure from the resistance to this area of, let's say right here, which was support resistance. This could be your intraday target, 134.32. Okay, 134.32. Now, in terms of your stop loss, you're going to have to decide how you want to plan your stop. We always coach our students to never risk more than 1 to 2% of their account, but we also give them a very strategic way of executing risk management. So it's not simply just saying, oh, we're going to drop our stop right above the previous wick or above the wick. There are certain things you want to factor in. You know, is this a strong reversal zone where the market could come up and retest and reject off of this trend line? And also looking at the weekly or daily area where this is still a strong turning point. So I'm always paying attention to the wicks, right? And this is still our trend line resistance. So either we want to wait and position ourselves for a much stronger entry, or we could probably execute here with a very low lot size, and then maybe another position if price does push a little bit. So we will lower the lot size, so that would give us more advantage. So that's one thing you can do. Whatever you do, you got to have a plan, because that'll help you execute confidently. Okay, so now let's move back to our 1 hour time frame. So I've already gone over scalp. For intraday target, if we take a sell off of this with good entry confirmation, okay, we have some bearish confirmation, you could take this for about 40 pips to the downside or even more. You possibly could take it right back to this area here. So you'll see right here at 134.08, this is a previous area that was a turning point as well. It was very strong resistance, it was very strong support, and now it has formed resistance. So now you see the market dropping. I don't know, by Sunday or so, we may see it push back up to retest this area here or even higher. I would prefer the short from this area here. So I would want the market to come back, give me a nice entry for a short, and then a continued move downward if I were going to continue consider something short term. All right, so I've gone over scalp, I've gone over intraday, and now let's go over a swing target. So if we continue bearish, let's say if that market right now, it's Friday, things are going to probably slow down a bit soon. I don't know what's going to happen, guys, to be honest, but you can see we are already pushing down. So we're pushing down from that resistance. It's Friday. So in terms of a swing, I don't know if I would recommend a swing right now, because it is Friday. I need to see what's going to happen between now and Monday. So I think Monday we can come back and revisit, be ready for CPI. And for those of you who trade news, just position yourself for that. I wouldn't trade anything long term right now. So overall, this is the resistance area you want to watch. This is your resistance, which is our weekly high so far. This is your daily high as well. And here is our main support. So this is your trading opportunity opportunity right now. If the price action is in between, so in between, in the middle, that is a risky area to do anything, in my opinion, unless you are a breakout trader and you're trading breakouts. Okay, so guys, that is the plan for USDJPY. I hope I provided some clarity for that. I've given you the levels, also the directional bias. So your directional bias on the daily is short or bearish until we get a break of this support and we push higher, break above this trend line and continue upward, then we will switch our bias from one of a bearish bias to one of a long bias. And also we have to monitor fundamentals as well. So we'll give you updates inside of our Telegram as much as we can. But if you are a new or struggling trader and you really need help, I want to encourage you to consider our academy. All of the information is down below in the description. You can also send us a private message anytime via email and we'll be happy to help you out. Guys, I hope this was helpful for you. Give me some feedback in the comments and let me know, what did you like? What pair do you want us to evaluate next? And we'll see you in the next training video. Thanks for watching.